Thank you for joining us today for today's webinar. My name is Sean Smith, and I'm the staff analyst at the Navy Department of Office of Small Programs. My office is led by our distinguished director, Mr. Jimmy Smith. We started these webinars during COVID-19, during the pandemic, to try to continue to have ways to reach out to the small businesses industry, in the communities. The Department of Navy recognizes small business are the catalyst of innovation, and we use this platform as a way to attract new business partners. You can view previously events that we've recorded under our website, on our website under outreach and past events. We would like you to I would also like to direct you to our website, where you can find a wealth of information, including our non-OSBP ops plan. You can locate small business professionals and find information on how to do business with the Department of Navy, including the Command's long-range acquisition forecast. To stay current on OSBP upcoming events, you can register for our mailing list on the homepage of our website. You can also stay up to date about upcoming Industry Day, Command outreach events, and generally what's happening across the Navy by connecting with us on our social media platforms, which are Facebook, Twitter, and LinkedIn. Today we have a dynamic speaker, Mr. Joseph Greger, who's a Small Business Program Manager at Defense Contract Audit Agency. Mr. Greger with the DCAA is located in Fort Belvoir, Virginia. In his capacity as the program manager, he serves as the audit expert for the small business program with responsibility to provide assistance, consultation, and internal control with regards to audit requirements and their application to small businesses. Mr. Greger graduated from California University of Pennsylvania with a Master's of Science in Business Administration and a Bachelor's in Accounting. He began his DCAA career as an auditor at the Herndon branch office in Northern Virginia. He was promoted to supervisory auditor, then branch manager at the Springfield branch office. Mr. Greger has also served in headquarters as an OWD program manager and the operations director. Mr. Greger resides in Alexandria, Virginia. Mr. Greger, over to you.
All right, thank you, and good morning, everyone. Happy New Year. Sean, thank you for that excellent introduction. I think this is our second Lunch and Learn, so I do look forward to speaking with you guys again. I think the first Lunch and Learn, we did an overview and a introduction and overview of DCAA, and then we started to get into a little bit of the accounting system requirements. Unfortunately, we didn't finish the entire presentation, so my goal for today or for this Lunch and Learn is to wrap up some of those accounting system requirements so that you guys get the full picture. All right. Before I do that, I do want to do the intro and overview just really quickly. It just only takes about 5 minutes or so. I'm going to go ahead and share my screen so I can bring up the presentations. Destiny or Sean, I'm getting an error here. It says only the host can share this meeting. So would you be able to make me a host?
Sorry, go ahead and try again.
Perfect. Yeah, perfect. Thank you. All right, so I'm gonna go ahead and start the broadcast. I'm on an iPad, by the way, so my controls look a little bit different. And I'm gonna go ahead and pull up our presentation. All righty. All righty. Perfect. Okay, so as you know, let me go ahead and advance this slide. As you know, DCAA was established in 1965 by transferring all of the existing contract audit functions from each of the military services into a single contract audit agency. So, prior to 1965 or before 1965, DCAA didn't exist, and all of the military services actually had their own contract audit function. And so, at the time, the Secretary of Defense, Robert McNamara, said, hey, I think it would be more efficient if we had a single organization performing all of these functions as opposed to having it, a very decentralized function which was the way they had it, right? So in 1965, they decided to combine all these functions into a single contract audit agency, and as such, DCAA, that's when we became sort of came into existence. All right. We have oversight of about 9,000 contractors every year. We average more than 3,400 audit reports and examine more than $350 billion of contractor costs. So we have a fairly large reach for being, sort of a medium-sized organization. All right. Now, this slide here is our agency mission. Okay. Together with our acquisition partners, we increase warfighter capabilities by delivering high-quality audits and financial services to achieve fair and reasonable prices that protects taxpayer dollars. All right. Let's go to the next slide. So this is what we look like. We're about 4,600 employees. We're located all throughout the U.S. and overseas, primarily in the U.S. With about 300 offices. I think the ones overseas, we have one in Germany, and also I think there's an office in Hawaii. But like I mentioned before, as a audit organization, our primary responsibilities and duties is to perform all needed contract audits for DoD. We do have a small group of employees that we call financial liaison advisors. They provide accounting and financial services to DoD and also non-DoD. And DCAA is also involved throughout the different contract phases. And I'll talk about the different contract phases and the types of audits we perform in just a bit. But just one thing to note, DCAA, even though we are a DoD organization, we do work for other civilian agencies when requested. And typically that's on a reimbursable basis. So they actually pay us to perform audits. So, as a small business, what does that mean to you? Well, you could be a small business out there with contracts with, let's say, Department of Energy or, NASA, right? And so you might be saying, oh, I'm never to go through a DCAA audit. Well, there is a chance out there that you could, right? Because like I said, we do some audits for these other civilian agencies. So just because you're not within DoD, there is still an off chance that DCAA can audit your books and records. So just, keep that in mind. All right. This slide here just shows where DCAA is placed within the overall DoD organization. All right. We operate under the authority, direction, and control of the Undersecretary of Defense Comptroller. As you can see, this placement assures our independence from the offices that have procurement responsibility, such as the Army, Navy, and Air Force. All right. Now, if you think about this, this kind of makes sense because DCAA is really just an advisory agency. We do not make any procurement decisions. We don't award contracts, right? Things like that. And our services really goes to those contracting offices or contracting officers that actually make procurement decisions. So we assist them in making those decisions. And that's why we have this kind of organization, because we want to make sure we have objectivity and we have there's credibility with our audit reports, right? So that's why we have this sort of independent organizational structure. Okay, moving on. This slide here, this is our organization. Okay, Anita Bells is our director. Joe Bentz is our deputy director. The left column there represents all the groups within headquarters. I fall under within operations. The middle column there represents our regions. We have four of them. Technically three, but there's four listed. We have the Eastern, Central, and Western region. Field detachment is basically just a group of auditors that audit primarily classified contracts. Okay, so again, if you're a small business and you don't have any classified contracts, then you'll fall under one of the regions, right? On the contrary, if you're a small business out there and you have, let's say, the majority of your contracts are classified, then more than likely somebody from field detachment would audit your books and records, and you would fall within the audit cognizance of field detachment. Okay, the right column represents how DCAA is structured around the really big defense contractors, and we call that organization corporate audit directorates or CAD for short, okay? And again, as a small business, you don't necessarily need to worry about that because you wouldn't fall under one of the CADs. It would be strictly just those, those specific contractors. And, I won't read them, but you can kind of see who they are, okay? Let me move to the next slide. Okay, so, I mentioned the different regions, right? So this slide here just shows geographically where those, where they kind of, where the regions geographically are placed within, on the map. So the gray along the East Coast is primarily the Eastern region, the orange is Central, and the green is Western. So basically what this means is if you're a small business out there and you're physically located, your books and records, I should say, are physically located in one of these areas, then you would fall under that region, okay? As you can see, Washington, D.C., and generally all of Maryland and Virginia will fall under Eastern region, okay? We also have the CAD locations up here as well if you're sort of interested in looking at that, okay? All right, I'm going to move So this slide here just really shows our public website, which is www.dca.mil. Our public website actually changed a little bit. I'm going to just move past these real quickly, and I will actually pull up the public website, and I'll show you in real time what it looks like and some of the resources we have out there. Okay, so just bear with me on that. I'm going to move to this slide here, and this really just talks about the different kinds of DCA services that we can perform. And remember, I talked about, DCA is involved during the entire, during all phases of the contract. And so with this timeline kind of just shows the different audits and services we can perform during those different phases. All right. Now, typically during the pre-award phase or prior to contract award, DCA can do a number of audits, but as a small business, you would be typically concerned with what's called the pre-award accounting system audit. And, I mentioned, the last time we had this lunch and learn, I talked about some of the requirements of the accounting system criteria. So I'll wrap that up in this lunch and learn. So I won't get into that too much, right? But the other audit that small businesses would be somewhat concerned with, or you should have some understanding, would be price proposal audits, right? So whenever you submit your cost proposal to the government, if it meets certain criteria, then DCA can audit that proposal. And so it's really important to understand what is contained in a cost price proposal and what are some of the things you need to include to make it adequate so that the government gets, adequate cost or pricing data. So those things are very important. That's a topic for a different, a different lunch and learn. I won't, delve too much into that, but that's just something I think as a small business, you should be, that's something that you should have some understanding of. Now, moving through the contract phase, we go from pre-award, we go to then contract award, right? And then during contract performance, which is generally the longest period of a contract, as you can see, DCA can perform a number of audits there, incur cost, and we can do some other real-time labor evaluations and some other things like that, right? And then finally, at the end of the contract, when it's being ready to close, DCA can perform either a termination audit, or we can assist the contracting officer with the final voucher. All right. Okay, so I mentioned our public website. These are the small business presentations that we have available out there. Again, I'll show you that just in a moment here. Again, this is our website, but I'll kind of get into that a little bit more. This is my contact information. All right, so I think you guys will get a copy of this presentation, or if you want, you can take a picture of this or just write it down. But feel free to contact me at any point if you have questions or anything you want to ask audit related. You can go ahead and do that. Either shoot me an email or give me a call. All right. Now that's the end of this presentation. But let me just go real quickly. I want to move over into this is my this is the DCA website. So again, www.dca.mil. Now, this was recently updated. We do have a small business tab on the far right at the very top. Okay, when you go there, we have different sections that you can go to, right? So we do have a resources section here. So this is really nice if you want to, take a look at, if you want to find your cognizant office, right, you can go here, right? And then you can sort of include some information if you ever need to find your office. So that's a nice little tool. We also have links here to your local PTAC. We have links to the small business workshops and seminars. So I do quite a bit of workshops and seminars throughout the year, include, obviously I'm doing one now, but if you're interested in attending future workshops and seminars, you can always go here and take a look. Whoops, the page is not there. So that's something I need to fix. But anyway, I do have a listing there. I mentioned the presentation. So if you go there, these are all the presentations I have on our public website with a little title there. So you're welcome to kind of look through these. If there's an audit related topic that interests you, I recommend going there and taking a look at that training material, okay? We do have some resources here, okay? Whoops, actually wrong. So actually, if you go to the customers tab, checklists and tools, right? So, just as an example, if you're interested in submitting an incur cost proposal, you can go here and you can get a copy of our ICE model, right? So we do have a lot of information on our website. Under the customers, we have some guidance, we have checklists and tools. So there's a lot of information here. So the point is, highly recommend you check out this website whenever you get a chance. All right, so that is it for the intro. I'm going to transition back into the presentation. Okay. All right, let me pull up the accounting system presentation. And so I think we left off somewhere in the middle of the presentation, but just as a quick reminder, I think we have some time, just as a quick sort of kind of overview of just to sort of remind you of some of the things we had talked about. I mentioned a couple of things with the accounting system requirements. I think first and foremost, it's, I think it's always good just to remind people that the accounting system requirements, there's a certain trigger for this, right? So it doesn't necessarily mean just because you have a government contract doesn't necessarily mean you now have to follow these requirements. Okay, so generally there's a trigger that if met, then you would have to then comply with these criteria. And so the trigger is any cost type contract, right? Any cost reimbursable type contract. So cost plus fixed fee is generally the most common. That's what, you'll hear a lot of people, just say CPFF or cost contracts or, but generally what they're talking about is cost reimbursable contracts, right? So if you are being considered for a cost contract, or if you are awarded a cost contract, just understand the accounting system requirements are now going to kick in, right? So you are then required to follow these criteria. All right, so that's the first. The other trigger, and I don't typically see it a whole lot, but it's any fixed price contract with the progress payment clause. And the progress payment clause basically says the government will pay you, okay, at cost based on whatever milestone that is agreed to in the contract, okay? And so that milestone, like I said, is generally agreed to between you and the government before you sign the contract. And we typically see that mostly with construction type contracts. All right. If that doesn't apply to you, if you don't have the progress payment clause within your fixed price contracts, then there's nothing to worry about. Okay. You are not required to meet these 18 DFARS accounting system criteria. Okay. So that's really the first part. And that's really, again, like I said, I think that's worth noting because, I meet a lot of small businesses and, they're, I sense a lot of anxiety with them because they want to make sure they're doing everything right. But, just understand, there's triggers for a lot of these things, right? So these aren't automatic criteria that just, all of a sudden you have to now comply with. Okay. So that's really the first thing. Again, I thought that was important to sort of kind of highlight. I think some other things I talked about, direct costs and indirect costs, right? So it's really important that your accounting system is able to track and record direct costs, okay? The same thing with your indirect costs. And, one technique, or, most accounting systems that I've seen at least, utilize your chart of accounts. Okay, so just keep in mind, it's very important that when you're first setting up your accounting system, okay, you want to have some system in place, some methodology in place to be able to record and track all of your direct costs and all of your indirect costs. Okay, more specifically, your direct costs, you want to be able to do it by job. Okay, so let's say you have 10 contracts, right? So your chart of accounts should establish how you plan on charging all of your direct costs by the different jobs that you might have, right? And just because you might have only 3 jobs now, okay, down the road, in a year from now, your company is going to grow. So you have to make sure whatever system you have in place, you can expand to not only having 3 jobs, but maybe 10 jobs or whatever the case might be, right? So that's I think something that's very important. Same thing with indirect costs. You want to make sure you're able to track and record all of your indirect costs, okay, typically by account and also by pool, right? So every company is going to have a unique cost. Your indirect cost structure is going to be different, right? So whether you have fringe overhead G&A, some companies might have, let's say 2 overheads in G&A. Another company might only have just a G&A. So your indirect costs need to be, the system needs to be set up so that your indirect expenses can then be accumulated and tracked by account, but also by pool. All right. So I think those are some noteworthy things that I discussed in the first Lunch and Learn. Now, at this point, I'm going to transition over to talking about some concepts here. We didn't cover this in the first Lunch and Learn, so I want to go over it during this Lunch and Learn here, because I think this is very important. So the first, we're going to talk about allocability. I'm sorry. The first, we'll talk about allowability. Okay, so allowability, if you look at FAR 31201-2, what this says is a cost is allowable only when the cost complies with the following. Okay, now why is this important? Okay, why does it matter if a cost is allowable, right? Well, guess what? You can only get reimbursed for costs that are allowable, right? So the government is not going to pay you for costs that is unallowable. Okay, so obviously it's very important to know. It's very important to know what is allowable, so that you can then bill that to the government and get reimbursed. Okay, and so if we look at FAR, right, 31201, this basically talks about the criteria for when a cost is allowable, right? So the first is going to be, it has to be reasonable. And don't worry, we'll talk about each of these in a little bit more detail, okay? So number 1, it has to be reasonable. It has to be allocable, okay? It has to meet the terms of the contract, and then any limitations set forth in the entire subpart 31.2, okay? Now, you're probably saying to yourself, hey, Joe, you skipped one, right? Applicable cost accounting standards, which is that 4th bullet down, okay? As a small business, you are exempt from cost accounting standards, right? So just keep that in mind. You do not have to follow the criteria contained within CAS, right? Because like I said, as a small business, you're exempt from that, okay? With all that said, it's probably just this is just sort of me speaking, if in kind of in a generic perspective, it's probably a pretty good idea to maybe have some understanding of cost accounting standards, because at some point you may not be a small business anymore, right? And so CAS actually talks about when you become CAS covered and so on and so forth. But if at some point you grow as a company, you may not be considered a small business anymore. So as a result, you'll be required to follow cost accounting standards. So it's not a terrible idea to have maybe some certain level of understanding of CAS, just because at some point you might then be required. But at any rate, just understand, as a small business, you're not required at this point. So let me talk in some detail about some of these in the next slide. So in order for a cost to be allowable, it first has to be reasonable. And what FAR says, it says here that a cost is reasonable if in its nature and amount it does not exceed that which would be incurred by a prudent person in the conduct of competitive business. And it is the contractor's responsibility to establish that each cost is reasonable, right? Now, I generally like to give an example to sort of highlight this, okay? And so, the example I always use is, let's say I'm flying to Florida for a business trip, okay? And when I get there, I rent an exotic sports car, okay? And I use that as my, rental car for business purposes, okay? And so, some people, if you would talk to other, what they have here, other prudent, people within sort of the same industry, most people would say, well, if you're traveling for business and you go somewhere, typically you wouldn't want to rent a sports car. You're paying a lot more money, okay? It's going to get you from point A to point B, just like any other, reasonable rental vehicle. So why pay the extra cash, right? So, I think that's an easy example. Renting an exotic sports car, typically we would not consider that to be reasonable. I do have another example though, and this one, pre-COVID, I was traveling and doing a lot of these seminars, and so I actually had a small business owner come up to me. We were at a break, and he said, "Hey, I have a situation here where he has a contract, okay, and the contract requires him that he has to go to this very remote place of the country, and he's not able to rent a car, right? Because a rental car wouldn't be able to get him where he needs to go, and the only method of transportation to get there is by helicopter." And so, if you would ask some people, hey, what if you traveled somewhere and you rented a helicopter to get around from point A to point B? Some people might argue that's unreasonable as well. But if you look at this individual's sort of circumstances because of what he was doing, being in a very remote part of this particular part of the country, a rental car wouldn't cut it, right? So in that example, I think the contractor can establish that the cost of a helicopter is considered reasonable because of the circumstances. And so, bottom line, reasonableness, I think what it comes down to is the contractor establishing that, because, at the end of the day, the government, we can't tell you what is reasonable because we're not going to know all the different circumstances that might happen, okay? And so that's why I think it's really important that contractors understand if you come across maybe something that is, out of the ordinary, then it's really your responsibility to say, hey, is this cost considered reasonable given the circumstances? All right. So I'm going to go ahead and move forward. I think I've hit on that fairly well. Let me talk about allocability. Now, this is pretty straightforward. So a cost is allocable if it is incurred specifically for the contract. Okay, now what is that? Now, we talked about this in the first Lunch and Learn. Okay, a cost incurred specifically for a contract is a direct cost, right? That's literally the definition of a direct cost. Okay, a cost is allocable if it benefits both the contract and other work, and you can allocate the cost to your contracts in reasonable proportion. Okay. That is a definition of an overhead expense. Okay, so overhead expense are those costs that you incur. Okay, they benefit several different contracts or jobs, and so what you do is you allocate them over a reasonable allocation base, right? And then finally, a cost is allocable if it is necessary to the overall operation of the business, although a direct relationship to any job cannot be shown. And that's the definition of a G&A expense. Okay, so G&A expenses, just real quickly, are those expenses that you incur regardless of the number of jobs that you have, right? Regardless of whether you have contracts at all, there are some expenses that you just have to pay. Okay, so let's say you hired a CPA firm to maintain your books, right? Well, you may not have any contracts, but the CPA firm is still, working behind the scene, doing their thing, and they still require payment, right? So you still have to pay them, even though you don't have any contracts. So that's an example of a G&A. So just understand what we're saying here is a cost is allocable if it's a direct cost, if it's an overhead expense, or if it's a G&A type of expense. All right. Okay, contract terms. I think this is really important because, in my experience, a lot of small businesses sort of sometimes they kind of overlook this particular topic. And so in order for a cost to be allowable, okay, it has to meet specific contract terms. And so it's very important as a small business, as the owner of the small business, you have to know and understand what the contract says, okay? Not only the deliverable part of the contract, obviously, you know what that is because, you want to make sure you deliver to, whatever service or whatever product it is, right? You want to make sure you deliver on that. But the contract also has other language, such as accounting and financial type of regulations and other things that are important, right? An example of this would be, contracts. In my experience, I've seen contracts that will specifically say a certain cost is unallowable, right? It might say overtime is unallowed. Okay, so if you didn't know that, then how would you be able to comply with that contract term? Okay, so if you didn't know that that term existed, and so then you go and you bill the government for your overtime costs, well, guess what? The government's going to say, well, this is unallowable because it doesn't meet the contract terms. Okay, so that's just one example, but the point here is it's really important that you understand the contract, not only the deliverable, but also, hey, what are those sort of what are those financial auditing types of criteria that I need to know that exists within the contract? Okay. All right. So accounting for contract costs. So a lot of, or I should say, the first half of the presentation is mostly theory. And so now we covered most of the theory. Now we'll get into a little bit more. This is a little bit more kind of straightforward, a little bit more nuts and bolts, if you will, right? And so on this slide, we show 4 additional requirements, right? First is you have to have a GL. So whatever accounting system you're using, you have to have a GL. That's pretty straightforward. You have to have a process in place where you can reconcile your subsidiary ledgers to your general ledger, right? So, typically every contractor job will have a subsidiary ledger or a job cost ledger, right? So, all those terms are sort of interchangeable, but you want to make sure that your job cost ledger, your subsidiary cost ledgers, they all reconcile to your general ledger, all right? You also want to make sure you have policies and procedures in place for the approval and documentation of adjusting journal entries. Okay, and then finally, you want to make sure that at least monthly you're charging or you're posting your expenses to your general ledger. Okay, so at least monthly. In my experience, most businesses are probably doing it much more frequently than that, but again, the DFARS criteria is at least monthly. Okay, all right, so let's move on. Now let's talk about the labor system. And I think this is very important because, labor, right, as a cost, labor is generally the biggest cost element, if not one of the biggest cost elements that run through your accounting system. So let's talk about some of these very quickly here. So what DFARS says is that you have to have a timekeeping system that identifies employees' labor by intermediate or final cost objective. Okay, so again, final cost objective is just a fancy way of saying your job, right? Your contracts or your job. Okay. You also have to have a labor distribution system that charges direct and indirect labor to the appropriate job. Okay. Now, with timekeeping, I do want to talk about a couple of things here. Okay, labor should be charged to your job based on a timekeeping document, and that document can be either paper or electronic, and it must be completed and certified by the employee and approved by the employee supervisor. So that's very important. Okay. Now, electronic time cards, typically I would guess at least most businesses are utilizing electronic time cards. Okay. And so some of these internal controls that you see are already built in, right? So, employees, certifying the time cards are sort of built in the electronic versions. If employees make adjustments, right, supervisors go in, they approve, right, that kind of thing. So all those things are built in. With paper, however, just understand you do have to make sure you have some additional controls with paper, because some of the advantages of electronic, you don't see that with paper, right? So a couple of things with paper. You want to make sure you can control which version of the time card that you have. Also, you want to make sure that employees can't just manually create their own time card. Okay, so that's a couple of things you want to think about. Employees should fill out timesheets on a daily basis and include all hours worked, including uncompensated overtime. All right, so that's very important. All right, so I'm going to move forward. I'm going to talk about unallowable costs, right? And so, it's very important that contractors have policies and procedures that identify and exclude unallowable costs, right? So, and why do we have this, right? Well, the biggest reason is because we want to make sure contractors exclude unallowable costs from their bill, from their claims, and their proposals, okay? And so if you don't have a method in place to identify them, okay, on the front end, then on the back end, when you're submitting a bill or a claim or a proposal, then how would you know that you would need to exclude them on the bill or invoice or claim or proposal if you didn't, identify them on the front end, right? So kind of in theory, that's kind of what we're talking about here. So again, I mentioned chart of accounts. Earlier on when I talked about direct costs and indirect costs. So again, with your chart of accounts, I think it's important that your chart of accounts identifies how you plan on, identifying and excluding unallowable costs. Okay, so in my experience, I've seen a lot of contractors use the 9 series accounts as the account to throw all of their unallowable costs in. Right. But, you don't have to do it that way, but that's kind of how I've seen it. All right. Cost by contract line item. What this criteria basically says is the accounting system needs to be flexible enough to expand beyond just a basic project number. Right. Sometimes contracts require that you record costs at a lower level than just the project number. And if that's the case, then you need to be able to make sure the accounting system can do that. And again, I think this ties back to your chart of accounts. Okay, so as an example, some contracts might say, CLIN 1 is where you'll record all of your labor costs. CLIN 2 is all of your material costs. CLIN 3 is all of your travel costs, right? And so the reason why the government does that is basically it's just a way to fund the contract. And so the way they fund the contract is also the way you'll get paid. And so in order to identify those costs, the accounting system would then need to be able to track costs at that same level, right? So that's kind of what we're talking about here. And again, this isn't necessarily an issue as long as your chart of accounts can identify how you'll track those costs. Okay. Okay, billings. So basically, what DFAR says here is billings should be reconciled so that the costs for both the current and cumulative amounts can comply with contract terms. Okay. Now, with billings, you should understand that only recorded costs that have been paid by cash check or other form can be reimbursed. Okay, so contractors could only bill and get reimbursed those costs that have been recorded and paid by cash check or other form. So like other form would be like, let's say, an electronic funds transfer. Okay, now the exception to this would be when you have subcontract costs or you have vendor costs, and you can show the government that you're paying your vendors and subcontractors and suppliers, you're paying them timely and in accordance with whatever conditions you set up with those vendors. Okay, then if you can show that to the government, then you can also include those on your bill as well. So technically, you haven't paid for them. Okay, but if you can show that that you are paying them on time and you pay them in accordance with whatever terms you've set up, then you can include those costs as well. And this was something, I believe this was something that was changed, maybe a number of years ago, but the government realizes, especially with small businesses, cash flow is something that is a challenge for a lot of small businesses. So I think as a way to sort of, circumvent that, or as a way to sort of remedy that, they've allowed you to include these kinds of costs as well. Okay, so additional things with billings, and I kind of talked about this just a moment ago, but it's very important that the bill, the amounts on the bill comply with the contract provisions. Okay, and again, this goes back to each contractor understanding and knowing what all those special provisions are within the contract. Okay, I talked about unallowable costs and some contracts specifically stating what those costs are, but contracts also have funding limitations, right? They also have maybe special withhold provisions, right? Maybe you can only bill up to 75% of the fee, things like that. There's ceiling amounts. Typically, there are ceiling amounts for every contract. Okay, so all those things, you will need to know what those are so that when you submit your invoice or bill to the government, that you can make sure that you're compliant. Okay. All right. Now, sort of related to that last slide, we do have some cost accounting information here, and specifically, I want to talk about what the FAR clause, limitation of costs, and also limitation of funds. And what those two FAR clause says is that it is the contractor's responsibility to monitor the funding and the cost ceiling. And when you reach 75%, about 75% of that limitation, you are then required to notify the contracting officer so that the government can take action, appropriate action. And typically, the appropriate action would be to increase funding. Okay. The risk here is if you do not monitor this appropriately and you submit an invoice and all of a sudden you exceed the funding limitation or the cost ceiling, the government does not have to pay the amount over the limitation that you've exceeded, right? So it's very important that you monitor this. Okay, it's also very important that you monitor your indirect rates and notify the government if your actual rates are significantly if there's significant variance between your actual rates and your provisional rates. Okay, your provisional rates, I have a separate topic on that. So if you're if you have questions or if you're interested in that, I would recommend looking at the training topic on provisional billing rates. But again, provisional billing rates is something that you need to submit typically at the start of the contract, typically at the start of your contract or your accounting period, you should submit provisional billing rates. All right. And then I think here, the last bullet, at least monthly, it's probably a good idea to have an employee, sort of assign this function to an employee, but have an employee monitor total contract expenditures against contract limitations on price or costs, right? And this is one way to ensure that you're not, going over those limitations. Okay. All right, so I'm going to move forward here. We're getting close to the end. This is the last criteria. This is management reviews and internal audits. Basically, DFAR says that management reviews or internal audits of the system, it says it requires that you perform management reviews or internal audits of the system to ensure compliance with the contractor's established policies, procedures, and accounting practices. So basically, contractors should be performing self-reviews of their employees and of their system to make sure it complies with all of the criteria that we had talked about, and also with your own established policies and procedures. Okay. Some small businesses decide to hire a consultant to do this. That's certainly your decision. The government isn't going to say you have to do that, but that's certainly an option if you have the resources. Excuse me. All right, so let me go ahead. We have some time. I don't know if I covered this on the last time around, but I will mention this real quickly though. One of the first things I talked about was, the accounting system requirements. There are triggers for that, and so, I mentioned cost contracts, right? Well, cost contracts, any cost contract, any cost reimbursement contract will have what's called the allowable cost of payment clause. And that's actually one of the most important clauses out there because it requires a lot from the contractor. And one of the requirements within the allowable cost of payment clause is the requirement to submit your final indirect rate proposal. Okay. The other term you'll hear for this is your incurred cost proposal, right? So it's different terminology, but it's referring to the same thing. So if you get a cost contract, right? So you're all, just keep in mind, you're also required to submit an incurred cost proposal. And the requirement is you have to submit 6 months after the close of your accounting period. So about 85–90% of the contractors we deal with, their accounting period ends December 31. So what that means is by July 1 of the following year, you are then required to submit your incurred cost proposal. Okay. The second part of this is going to be your final voucher. So once you submit your incurred cost proposal, DCAA will audit the direct and indirect rates. All right. Once we audit your indirect rates, you will have what's called settled rates. And then you are then required to submit your final voucher within 120 days using those settled rates, right? And this typically is the process for closing out contracts. Okay.
Oh,
So this, yes.
oh, Mr. Gregory, I was wanting to let you know we have questions that need to be answered.
Absolutely, yeah.
You ready? Or are you finished?
I am. No, I am. I'm ready. Go ahead.
Okay. The first question, is there a certain dollar threshold for contracts that can be audited for DCAA compliance?
So the only dollar thresholds that we have out there will be related to cost proposals. So if your cost proposal, if it's a cost reimbursable contract, then we would typically only audit the proposal if it's $100 million or more. If it's a fixed price proposal, then it's typically about $10 million or more. So those are the two dollar thresholds. Outside of that, I'm not aware of any dollar thresholds, right? So like, for example, with incurred cost, I mean, there's no dollar threshold per se. DCAA does perform a risk assessment on every contractor and incurred cost proposal. So we may not audit every proposal, and so we do perform a risk assessment on that. But generally speaking, there's no other dollar threshold that I'm aware of.
Okay, the next question is, would DCAA audit GSA schedule participants?
No, we do not audit GSA contracts because in theory, those costs have been already audited, right? I mean, if you're getting that off the GSA schedule, those have already been deemed, reasonable, right? Reasonable costs. So we don't typically audit those within a, kind of from an incurred cost perspective.
Okay. Next question is, what are the easiest accounting systems or software for DCAA compliance used by contractors?
Well, I mean, there really isn't any, well, let me go ahead and say this. DCAA does not endorse, we don't endorse or recommend any software, any accounting software per se. Basically, if the software, if it meets the criteria that we had talked about here, then we don't have a problem with it, right? I mean, contractors can basically use whatever they want as long as it meets these criteria. Now, in my experience, what I typically see is some version of QuickBooks. That's what I typically see for a lot of small business, some version of QuickBooks. And I think Uninet is another vendor out there that's kind of very similar. And I'm sure there's other vendors. I don't know all of them off the top of my head, but in my experience, I see a lot of small businesses use QuickBooks, right? So that's not to say that I'm endorsing it, but that's been my experience.
Okay. The next question is regards to adequate accounting system. RFPs ask us to provide evidence of an adequate accounting system. As a small business, we are not audited by DCAA. What do we provide as evidence in responding to these RFPs?
Yeah, that's a great question. So let me first tell you the regulation, what the regulations say, and sort of how things typically work. So, and I apologize if you already know this, but this sort of sets up, I think in a way this sets up my response. But so what FAR actually says it is the contracting officer's responsibility to determine whether a contractor has an adequate accounting system. And the way they would do that is with, if they have information available to them to make that decision. Now, if they don't have that information, or if they don't readily have information to make that call, then what they would typically do is reach out to DCAA and request an audit of the accounting system. Unfortunately, DCAA does not audit, we do not audit contractors' accounting systems at the request of the contractor. All right. So, and generally we perform the audit when the contractor is being considered for the award. Okay. So now that is sort of what kind of the process and what the regulations say. So based on that, what I would say, and this isn't, this isn't policy anywhere, but what you could do is do a self-certification. Okay. So there's a checklist on our public website. It's the accounting system requirements checklist. You could always do a self-certification of the checklist and submit that to the government. Another suggestion would be, and again, you don't have to do this, but if you have the resources, you could hire a consultant or CPA firm to perform an audit. Now, if you do that, I can't guarantee that the government would then say, okay, I accept that CPA firm's results, right? I mean, I've heard from contracting officers and other small businesses, they'll say that some contracting officers or some buying commands may not accept a CPA firm, and they only accept a DCAA audit. But that's so I just tell you that because I think at the end of the day there really isn't an answer for you. Those are just some things that I've seen, and those are just some suggestions that I have. I think part of the problem is just inherently it's the process. I think the process, personally, I think the process needs to be maybe revised, because it does inherently or indirectly, I think it harms small businesses, because it's almost like, which comes first, the chicken or the egg type of thing. And that's kind of the dilemma that I've seen, being in this position and talking to you guys. That's kind of the dilemma that I've seen. So again, I don't have a great answer. That's kind of just what I've seen.
Okay, well, that goes to this next question. If coming in as a subcontractor under a DoD contract that requires the prime to have DCAA approved accounting, if I come in as the sub, would I also need to have DCAA compliant accounting, or can I work through the prime?
Well, the criteria, the regulations actually state it is the prime contractor's responsibility to determine whether you have an adequate accounting system. So if you're a subcontractor and the prime is awarding you a cost contract, and if the accounting system requirements are, if they're contained within the subcontract agreement, which should be, they should be in there because that is a flow down clause, then it is the prime's responsibility to, obtain access to your accounting system and make sure it's adequate, based on the criteria. That's so I would say I would work with the prime, in that case.
Okay, well, another question is there a certification or class that can be taken in order to ensure that this knowledge is applied correctly?
No, I don't know. I'm not aware of any certification or class. I mean, I think me doing these seminars is probably the closest you'll get. There really isn't anything else out there that I'm aware of, at least.
Okay. Next question is pursuant to something different. Can you explain FCOM costs?
FCOM.
No, F as in Frank, COM costs.
Oh, I think you're referring to facilities capital cost of money. Is that what you're referring to? Yeah. So facilities capital. Yeah. So, I'm not too prepared to discuss that. It's a very complex topic. It really ties in with the cost accounting standards. One of the cost accounting standards is facility cost of money, right? So if we talk about the incurred cost submission, and I'll be doing that, I think at our next lunch and learn, there is a required schedule that talks about cost of money, and so it's really associated with contractors that have a lot of facilities, right? If you have a lot of storage space, or if you have a lot of facilities, warehouse, that type of thing, there's costs associated with that, and the government, if you meet certain criteria, the government is willing to reimburse you some of those costs. I don't have a much better response than that. I could do some additional research and get you a better response, or if you want, you can always contact me and we could talk about some of the specifics that surrounds your circumstances. But that's really what it is. It's really cost of money that's associated with large facilities, and the government generally would reimburse some of that cost to you.
Okay.
We don't typically see that with small businesses, though.
Okay, the last question I have is, what is the threshold that qualifies you as a small business?
Well, there's no threshold. My understanding is, if you take a look at the small business, the SBA, I think, has some criteria, but I think it really comes down to the NAICS code, the NAISC, I believe is the acronym. And don't ask me. I apologize. I don't recall what it stands for, but the NAICS code, I think you're given a NAICS code based on, the industry that you're in and the type of work that you do. And so, I think the rule of thumb is, if you have X number of employees, if you're within that, then I think you're considered a small business, but you also have to consider the NAICS code that you're in. So I don't think there's any clear-cut answer to that, but I do know the small business, the SBA has some information on that, and a lot of it, I think, is the number of employees and also the NAICS code, whatever NAICS code that you belong to. I think those things, if you look at those things, that typically that will indicate whether you're a small business or not. But DCAA doesn't really, we don't get involved in those criteria. That's not really our area of expertise. So I don't have a ton more than that. I would maybe recommend just checking out the SBA website.
All right, thank you very much, Mr. Greger.
Sure.
That's it for the questions. I want to thank you so much for providing us with this wealth of information today. And Mr. Greger will be hosting another webinar on February the 16th, and it will be titled Incurred Costs. So please register, and it will be posted on our website and upcoming events as well. Thank you.
Perfect. Thank you, guys. Have a great afternoon.
Before we leave, thank you. This recording will be posted on our website within the next week or so. So you'll be able to have access to all the slides and everything and all the information. Thank you again.
Excellent. All right. Well, thank you. Have a great day.